Do you hate the thought of working past 55 or 60? Do you hate not being able to live the life you deserve today? Do you hate not knowing what your financial future looks like? It's time to stop doing what you hate. Here's your host, Mr. Harold Green.
Aloha, everybody. This is Harold Green of Bright Tree Wealth Management, and it is time to really stop doing what you hate. I know I say aloha because I'm not in Hawaii right now. I'm in Vegas, but I always feel like I'm in the spirit of aloha, which is, being kind, being giving, sharing, and, giving of yourself to others. And basically, man, that's what this is all about. And I was talking to my good friend, Brian B, last night, and I was just kind of sharing with him some of my, some of my frustrations and some of the challenges that I have, and then, how to work through those things and how to overcome those things. And, I'm always a very optimistic person, but it doesn't mean that you don't get tired and things don't wear on you. And I always have faith. I always believe, but there's work to be done. And so today, I'm really, really excited to be sharing today's show with you folks, because I think that we are in a generational moment right now where we have the potential to build the kind of wealth that people only dream about, people only imagine. And I was going to do a show about how the rich get richer, but I think I decided to change my mind because, quite frankly, what does it mean to be rich? Does it mean having a yacht? Does it mean being able to pay all your bills and, not have to worry about money? Does it mean you can have any kind of car you want? What does it truly mean to be rich? Like, what is your definition of rich? And the reason why I decided against the show, because everybody has a definition of what it means for them to be rich. Some people say, man, if I can just, buy a new car and not have to worry about a car payment, I'll feel pretty rich. I'll feel pretty good. And sometimes being rich is not only a mindset or a physical situation where you have all the assets, but it's also a mindset. And the reason why I decided to go against that title, How the Rich Become Richer, is because I'm just going to, quite frankly, give you some ideas today as to how you can max out your current situation and move to the next level and keep moving to the next level. Because, quite frankly, I don't know how far you can go, and I don't know the kind of intellect that you have. My goal here of the show is to educate you versus to entertain you. And if I can entertain you and educate you at the same time, I would call that edutainment. Sorry. I think I had way too much coffee this morning and it's way too early, but I'm going to do this anyway. So I have had a pretty interesting week. This is the second week, my son being on board with me in the firm. And we did a market update the other day. And thank you, everybody who watched the Market Minute that our clients and gave me the positive feedback, because he's a really smart fellow. And I'm excited to have him as my co-pilot flying the plane right now, because, we're in some very turbulent times. And we've done a lot of good work this week, and I'm excited about it. And the title of today's show is Surviving Stock Market Turmoil. So are you ready? 1, 2, 3, let's get it. Surviving market turmoil. I mean, that's a lot. And because we're talking about the stock market, I have to put the disclosure out that all investments do carry a risk of loss. Past performance is no indicator of future results. And before you invest, you have to understand your time horizon and understand your risk tolerance. Make sure that you are investing your portfolio, or whoever's doing it is investing your portfolio in accordance with a well thought out, comprehensive financial plan that covers all your goals and all your needs for the next 40 or 50 years until the day you die, pretty much. And then also have some sort of estate situation put in place so that it doesn't get ruined on the way down to your kids in the second, third, fourth, fifth generation. So that's very, very important. So what I want to talk about is, right now we're in a situation in the market where there's some extreme turmoil, and there's so many ways I can go with this, but I'm going to try to stick to my plan here and talk about what's really happening. The fundamentals of corporations that we invest in, the fundamentals have not changed at all. The outlook for the economy has changed, and the outlook of the economy has two sides to it. It's how do corporations look at the future economy, and how do regular everyday people look at the economy. And right now, we're in a bifurcated economy, meaning the well-to-do will continue to do well-to-do, and the ones who are suffering will continue to suffer unless something drastically changes. And when I look at the first thing I want to start with is I want to start with the AAII Investor Sentiment Survey. And you can type in aaii.com/sentiment survey. This is one of the first things I want you to check every day before you check your portfolio, because a lot of people, okay, the first thing they check every day when they wake up is, how's the stock market doing? How's my money doing? You know, the first thing I do every day, the first thing I check every day, I get my affirmation sheet. I go through my affirmations. I read scripture. I take notes. I pray. I don't even look at this stuff. Like, I got to set my mind to what is eternal and what is ultimate versus what is momentarily, because everything you're looking at right now is momentarily. Whether you're up 10 million, you're down 500,000, whatever, it's all momentarily, and it's all subject to change. And that's what you have to understand. You got to put this stuff in the proper perspective. Yes, we want to be educated, but the question is what are we shooting for? Well, if I want to survive stock market turmoil, there's a process that I have to go through in order to do that. And the reason why I say this is because I'm a professional. And I learned this from my boss, Wendy Hanna, a long time ago. God bless you, Wendy, wherever you're at. I'm sorry I was not the best employee. I'm sorry I was not the easiest employee that you had ever had to work with, because I was just like, I don't know, I was out there. I was trying to get stuff done. I was just trying to like make stuff happen. But she told me, she said, look, you are a professional. The reason why I say you're a professional is because you get paid to come here and do this job. You don't come here and work for free. You come here, you punch in, you punch out, you get paid for that time. That means you are a professional. You're not an amateur, okay? You're doing this for a living. It's your profession. You are a professional. And that's how I see this job that I do right now, is I have to behave like a professional. See, professionals do things that amateurs don't. And if you're investing and you're sitting there like, you know, trying to figure this thing out, and where do you fall in this AAII investor sentiment survey? Are you bullish right now? Because right now, only 19.1% is bullish. 21.7% of the investors out there are neutral. 60% of the people out there investing right now, they're bearish. They're extremely bearish, and they're scared. Okay. Now, that doesn't mean that they're not still investing. They could be investing in things like gold, silver. They could be taking very defensive positions, but their sentiment is very negative on the outlook of the market. And this is crazy, because when people get extremely bearish, that's when, as a professional, I get extremely bullish. And it goes back to I always check the CNN Fear and Greed Index as well. Okay, where's everybody at right now? They're at extreme fear. It's at a 16 today. CNN.com/markets/fear -greed. Look it up. Pay attention to that. These are the first things we got to be looking at before we check our portfolios. What else is going on right now? We're in a major investment trend, I believe, that is setting the country up and the world up for the next 30 years of just hyperbolic growth. I'm not saying there won't be market corrections. Okay. I'm not saying that. But I'm saying is, if you put money to work and you let it work for the next 30 years, depending on which company you buy, you're probably going to be pretty impressed. You hear people say this all the time. If I would have bought Tesla or whatever, you know, Apple, when it came out and just held the stock, I'd be like Jeff Bezos right now. Like, yeah, you would. But these are the things that trip you up, and people don't survive stock market turmoil because these things trip them up. And what else trips them up is there's a real negative media blitz right now. I mean, it is negative. It's like they want the stock market to fail. They want it to look bad because they hate the president. These people are some of the most disingenuous people on the face of the earth. Why do I say that? It's like they get paid to do what they do, and they know exactly what they are doing. They're not just sitting there sharing their opinions with you. They're doing this on purpose. They're withholding information from you on purpose. And as my friend was telling me yesterday, he said people are only educated based on which channel they watch. And if they watch CNN, they're not going to watch Fox. Everybody on Fox is evil. If they watch Fox, everybody on CNN, everything over there is evil. And another client said, hey, look, Harold, Are you telling me that these economists, these people who have PhDs, these people who know what's going on are being dishonest with us? My answer is yes. Because if you don't tell the whole truth about a situation, it's a lie. It's called being dishonest. Now, I try to give my listeners and my clients as much information as I possibly can. And if I leave something out, please forgive me. It's not like I'm trying to mislead you on purpose. I'm simply I've been mandated with telling you the truth in order to get you out of the 97% into the 3%. But it's up to you if you want to come or not. But these people it's a negative media blitz. They get paid to drive fear. They get paid to just make everything look bad. That's their job. They're professionals at it. And you have to understand that. Okay. They're not sitting there trying to help. They're not fiduciaries. You got to understand that. Their goal is not to do what's in your best interest. Okay. They know what they're doing is wrong. I'll give you an example. We had this thing about tariffs. And people look at it one of two ways. They either hate tariffs or they love tariffs, or they're like maybe somewhere in the middle and don't really know what's going on. I'd say most people have no idea what's going on, how tariffs even work, why they work, what are they used for, because people won't educate themselves on what's going on. And I tell people, if you're not going to educate yourself, then you got to pay somebody who's willing to do it. And that's what I'm here for. Okay. Again, extreme fear in the market right now. Investor sentiment is extremely bearish. Soft data, you can look this up. Basically, the soft data is people's emotions and how they feel about things. It's not real. People are thinking inflation is going to be like 4, 5, 6% over the next 18 months. The question is how? Why do you think that way? It's because of what you're being told, not what you know. It's about what you're being told, what type of information you're taking in. You can look at it like the glass is half empty or the glass is half full. Which one are you? Some people tend to lean pessimistic on, like, they wake up in the morning and they're pessimistic out the bed. I mean, they wake up on the wrong side of the bed every day. You know, they get in traffic, they're pissed off. They're going to work, they're pissed off. Like, they're like ticking time bombs. Anything can set them off. So some people are just naturally inclined to, like, they just got like my grandma used to say, but she got a mean streak. She got a real mean streak. You better watch out. I don't know if you want to date that girl. Her family, they got a mean streak. They'll fight you in a minute. Thank you, Grandma, for all that education, that common sense stuff, and it's the soft data that is really driving the market, how people are feeling. And then that kind of, like, we don't want that to influence the hard data. The hard data, stuff like CPI, PPI, PCE, like all of that stuff. And here's what I'm going to tell you. Here's how to survive. Okay. The first thing I want you to check every day before you check the market is investor sentiment. AAII, check mark. Number 2, check the CNN Fear and Greed Index. Check that off. Number 3, we're going to check bond yields. What's the 10-year bond you're doing right now? Because the 10-year bond yield is what kind of dictates what mortgage rates are going to be doing. Okay, boom, check that. Number 3, we want to check crude oil prices. So we're going to go to, tradingeconomics.com/commodity/crude-oil. That's tradingeconomics.com/commodity/crude-oil. Okay, punch that up. Look at this. This stuff is all free. Okay, and oil prices, boom, they're dropping like a rock. And if you want to look at some history, check out the 10-year chart on oil prices and see what happened. You'll see from 2020, and then from, say, 2020 to 2022, oil was up $113 a barrel. Why? Energy policy of the previous administration. They had a negative view on how fossil fuels impacted the planet. And so they drove the price of oil up to $113 a barrel. Yeah, people were complaining about gas prices, but if they were investing in the market, they didn't care, because the stock market just, well, I wouldn't say during this period, because inflation was up as high as crap as well. It was like 9%. So yeah, we were in a bear market back then. It was bad, but the media was not on a negative blitz. They were talking about all kinds of crazy stuff. Everything was great. But oil was $9 a barrel. It was $113 a barrel. Inflation was like 9%. The media was like, everything is great. Everything is great. Why? Because they were in love with the guy who was president of the United States. Again, these people are very genuinely dishonest. They don't care about you. They're not fiduciaries. And you need to understand that. Okay. How to survive stock market turmoil. Oil prices are coming down now. I just had to share that with you because I don't know what people tend to watch on TV, but a lot of people are watching stuff on TV and then that's dictating what their portfolios do. Don't do that. These people are not fiduciaries. They don't have your best interest in mind. They're professionals. They get paid to get $10 million contracts a year. They don't give a crap about you. Okay. That's for real. All right. Now, and I'm not saying all of them are mean and bad, but I'm just telling you that their goal is to get, 5-10 million a year in annual contracts. These are talking heads. Understand that. All right. Talked about the hard data. No, look at all this before you look at your portfolio, because this will help you understand why your portfolio is doing what it's doing. Because, I love my clients. I can tell you this for sure. At the same time, I don't want all 400 or 500 of them calling me every day saying, Harold, why is the market up today? Or people look at, why is the market down today? Because I hardly ever get the question why the stock market is on fire. Why is it down? Like, what's going on? Like, why is it down? Like, why is my portfolio down? Why are we losing money? And I'll tell you, you're not losing money. It's just, you don't lose anything until you actually sell the stock. And in oversold conditions, this is what people do. They oversold, and more selling begets more selling. You don't want to be a part of that crowd unless you necessarily have to. If you can't sleep at night, and here's what I'm going to say about risk tolerance. You're a high risk tolerance person until the market crashes, and then you're a low risk tolerance person. When the stock market goes off on fire, now you're a high, the market's doing great. Now you're more optimistic about the future. See, this is how this risk tolerance thing works. It's about your optimism level. If you're a pessimistic person, chances are you're not going to be a high risk tolerance person. You're going to be like more of a conservative, and you're always looking at the negative side of things. Okay. So it's and then if the market changes, you can be, optimistic and back and forth and back and forth. This is an emotional gig here. And you got to make sure that you're not getting caught up in the emotional gig. The other thing you can look at is you can look at the short interest on positions at NASDAQ. So NASDAQ.com/market-activity/stocks. I'm just doing Tesla right now, /Tesla/short-interest. And then right now, Tesla short interest is, it's, they're starting to cover their shorts for some reason or the other. I guess they think Tesla is going to rebound here sometime soon. That's another indicator of what a position may or may not do, is by looking at that. So understand if the market is in extremely oversold situations. And there's a website you can go to for that. It's wallstreetmojo.com/oversold. And then just kind of look at things. It'll tell you what, just educate yourself a little bit. Now, again, I'm going to tell you like this. Not everybody wants to know all of this stuff. That's fair. But if you're going to have money invested in the stock market and you care about whether or not it goes up and down, I'm just simply trying to educate you as to what to look for if you do care. Now, if you don't care and I'm managing for you, that's absolutely fine. You understand this is a downturn in the market. You understand we have time to recover. You don't need all of your money today, right? We don't need to put it all in a bag and then hide it in a closet so you can sleep at night. We don't need to do that. And a lot of my clients, I thank God for you, because you're not like that. I got one or two that get scared from time to time, but that's okay. It's just, it's whatever. And I encourage them to ride through this because they said they have specific goals. And I said, well, this is the way to get through it. I had one, a client come on board a while back, and she was conservative. And she's like, Harold, I never knew about this stuff. My other team, they never told me about the stuff that you're doing. And this sounds crazy, but, I want to go from being conservative to being like super aggressive because I have some mega goals that I want to accomplish. I said, well, I'm going to tell you something straight up right now. It's not going to be pretty. It's not going to be pretty. We're going to go through some difficult times in this market, and you're going to take some big swings in your portfolios. But ultimately, you're going to be way ahead. Okay. You're going to be way ahead based on how things historically go. And if the trends hold, you're going to be fine. I can't guarantee you that. And so we'll make the adjustments as necessary, but I believe you're going to be fine. And so how to survive the market, I just shared with you where to look before checking your portfolio and what each of these websites mean. You can't have a recession when gas prices are falling like a rock. You can't have a recession when interest rates, bond yields are dropping like a rock. You might go into stagflation, but normally recessions don't kick off like this. So for every idiot on TV talking about a recession, they see a recession on the horizon, they could be right because something catastrophic could happen, but chances are there won't be one based on, and the chance of a recession is slim. Even the Federal Reserve came out and said that. Now, I don't take what politicians say because the president says, I don't see a recession, and they can go do something stupid and blow the world up with a tweet. I don't follow that. All right. Number two, make proper adjustments and don't do anything fear-based. You got to be calculating. You got to be calculating. If you got to be making adjustments in your portfolio in times like this, you got to be calculating. Okay. Being calculating is, like I said, looking at fuel prices coming down, looking at oil prices coming down, looking at bond yields coming down, looking at the treasury yields and things like that. Yeah. Checking the CNN Fear and Greed Index. Now, can the market get worse? Yes, it can get worse. But I'm telling you, what I heard was mean dogs only bite scared people. And what that means is if you've ever like come in contact with like a dog that's just like barking and he's like really aggressive, the first thing you don't do is like, you don't make any sudden moves. Okay. You be still, you calm yourself down because dogs can smell fear. Okay. And it's the same thing in the market. Like the market can smell if you're, and this is like some spiritual crazy stuff. The market can smell if you're scared, right? And you can get teased into doing the wrong thing, making a sudden move, and then boom, all of a sudden, the cold spring effect kicks in, and the stock you just sold is up 50% in a month. And you're like, oh my God, you just got dog bit, okay, by the market. Now, if you need to adjust your risk tolerance, here's what's going to happen. If you need to adjust your risk tolerance in a down market, it's going to take you like, the average time to recover your portfolio is 60 months. 60 months if you make bad trades in a down market. 60 months, that's a long time to recover, right? Because you sold and now you got to figure out how to reinvest it in a conservative way. And it takes you 60 months to get back to where you were. And some people, they just, when they get dog bit, they just like, I'm not going by that house again. I'm not walking down that street again. Like, no way, Harold, I'm not going there ever again. I've been dog bit. Like, I'm not doing this again. And if you just had waited a little bit, just a little bit, it could have been a month or two, or maybe even 3. You would have been fine. And again, I'm not saying like not sleep at night, but I'm telling you, if you make these moves in a down market, you're 60 months away from recovering your position, unless you get extremely lucky and you hit it out of the park with a stock. But then again, you've been dog bit. So you don't even have the confidence to even make those trades. And I've met a lot of people like that. And it's really hard, really hard. And that's why we still have a big 97% of people out there who can't retire with enough to live on. The average 401k account I saw today was like $137,000. The average 401k, like, that's insane. And there's a lot of work that needs to be done in those portfolios. But again, if these people have been dog bit and they haven't had the right advisor, they're listening to these, I call them idiots on TV because I'm sorry, Lord, please forgive me. But I mean, I would say people that are disingenuous. I take that back. I apologize. People that are just really disingenuous. Okay. They have an agenda. They're not fiduciaries. They have an agenda. As a fiduciary, I have one agenda, and that is you and accomplishing your goals, your dreams, and getting your family from where you are today to where you really want to be. So hopefully I've educated you and entertained you a little bit at the same time. Hopefully I didn't make you mad, because that's not my goal, but it's just to strengthen your position, to educate you. The Bible says my people perish and suffer for like lack of knowledge. People are suffering from what they don't know. And sometimes people suffer for what they know, because sometimes they learn the wrong thing and they implement it the wrong way. Another reason why people don't survive stock market turmoil, because they have bad timing. Bad timing. They buy at the wrong time, sell at the wrong time. So I just want to encourage you to hang in there. I believe that, again, this market is setting us up for a major reversal and forbidding any kind of war or something that's out of our control or some kind of geopolitical thing going off. I believe the market is going to be fine. But if you need to adjust your portfolios, do that so you can sleep at night. But do understand you're doing it with knowing that it's going to take you 60 months to recover. All right. So you got to understand what your choices are. I should just shut up. I should just shut up. So thank you very much for tuning in today. If you think that we can help you, or you want to hear a little bit more about what we can do for you, check Beverly out. Call her up, 808-521-4401. She'll talk to you for a little bit, see what you got. hear what it is that you're trying to do, and then see if we can be of an extreme blessing to you and not a curse. And that's my goal, is to be a blessing to you and not a curse, right? To help you and not to harm you, to heal you, not to harm you. That is my goal. So thank you very much for listening to today's show, Surviving Stock Market Turmoil. And until next time, everybody, 1, 2, 3, let's get it.
This is thepodcastfactory.com.